George of the jungle, strong as he can be.
How come there are so few homes available on the market? And aren't the rising interest rates going to contribute to even less homes being on the market? Welcome to thecreditjungle.com. This is George Anderson. Thanks for coming in. And we're going to talk about some real serious factors that are affecting the market right now, especially for people who are trying to get into their first home, and how that affects other people who maybe have a home and would like to consider trading up and going to another one. And yes, interest rates going up, having gone up more than 2% since the end of 2021, is having a big effect on the supply of housing. And let me explain how this is. How many people do you think are sitting out there right now with an interest rate on their house of maybe 3.25% or less? I'm telling you right now, just on the Wasatch Front, the primary market where I'm doing all of my mortgage business, okay, that is probably, I would say, close to half of the homeowners. So that's tens of thousands of people who intuitively know that if they're sitting in a house that's worth $500,000 and they have a mortgage that's at 3%, okay, and they might owe $400,000 at 3%, why would they want to get rid of 3% money at $400,000 and trade that for 5% money at $600,000 or maybe even more money owing on that? Well, yeah, they're perfectly content to stay into that house. But what if you could take that 3% mortgage with you to the next house? Well, if you're a seller, a potential seller, and you're in the market and trying to figure out how do you justify losing this lower interest rate mortgage and replacing that with a higher interest rate mortgage, this is a great piece of information that I'm going to share with you in a few different parts. But all I'm going to do here is just explain a concept that is a very, very powerful concept to understand in this market today. That if you are a homeowner and you already have a home, and you're going to have equity if you own a home right now. So that is one financial asset that you are sitting on, is the equity of your home, because you have that equity, which is the power of a down payment, which has probably accumulated more in value. And if you've been in your home for 2 years or longer as your primary residence, this is a tax-free lump sum of money that is, I'll guarantee you, has accumulated faster than the money in your 401k or any other type of investment that you've been making, especially when you consider that it's tax-free. Well, that's a tax-free lump sum of money that you can port into your next home if you sell it. The problem is that you're going to lose the terms of the financing on that. Well, what if there was a way that you could take that, let's just use it as a 3% interest rate loan, or better, there's people out there that are in the 2s. What if you could take that interest rate and move that, or the benefit of that lower interest rate, and bring it into the next house so that you didn't have that additional high interest cost, okay? So you have a second asset right now in addition to the equity of your home, and that is a low fixed rate of interest on your home. That is an additional financial asset. And if you understand how banks work and how banks make money, I'm going to put together on some subsequent videos a transaction that can show you how to take that low interest rate mortgage and take the benefit of that mortgage with your equity and move it into another house tax-free, and completely eliminate the sting, or the adjustment, if you will, of that higher interest rate by leveraging your second financial asset, which is your low interest rate mortgage. Stay tuned, strap in, and hang on. This is George Anderson. Remember, you can push button get mortgage professional. And thanks for coming into thecreditjungle.com, and I look forward to bringing you this next nugget of information that I think you're really going to enjoy. Have a great day.